Ever feel like you're stuck in a financial roller coaster, up one moment, down the next? You're not alone. The truth is, most people struggle because they're stuck in the cycle of working harder but never getting ahead. But what if I told you that by mastering one simple habit, you could break free from this? Bill Gates didn't get rich by working more hours, he got rich by working smarter. And in this video, I'll show you exactly how you can do the same. By the end, you'll know how to weather financial storms, grow your wealth, and adopt the mindset of the ultra-successful. Ready to start taking control of your financial future? Stick around, you won't want to miss what's coming next. Before jumping into the excitement of the stock market, it's crucial to first master the basics. Think of it like learning to ride a bike. You wouldn't try a downhill race before understanding how to pedal and brake, right? In the world of investing, that means getting a solid grasp of the fundamentals. Learn how financial markets operate, dive into the key concepts of stock prices, bonds, and even cryptocurrency. Start by reading books on financial literacy, like The Intelligent Investor by Benjamin Graham or Rich Dad Poor Dad by Robert Kiyosaki, to build your knowledge base. And don't just rely on theories, look at real-world examples and start small. Once you've got the basics, it's time to apply your knowledge. You wouldn't go all in on a risky move in the market without understanding what's at stake, so why take the same approach to your finances? Take the first step with investments that are lower risk, like index funds. They might not promise a quick return, but they can teach you a lot about the ups and downs of the market. By starting small, you're not just investing money, but also your time and experience in a safe way that sets you up for greater success down the road. Think of building your financial understanding like putting together a puzzle. The more you learn, the clearer the picture gets. Start with the simple pieces, things like saving, budgeting, and understanding debt, before you try to jump into more complex investments like real estate or stocks. Once you've got the foundation laid down, things start to click and you can move forward with confidence. The key is to resist the urge to skip steps just because you're hungry for quick wins. Real financial freedom comes from mastering the basics, then building on that knowledge over time. By taking the time to understand how money works, how the economy, investing, and markets intertwine, you put yourself in a much stronger position to take calculated risks when you're ready. It's a strategy that pays off. And when the time comes for you to go big, you'll be making decisions based on knowledge, not on a whim. Next, we'll talk about how to keep your head straight when the market gets wild and unpredictable, because, trust me, it will. When the market gets wild, it's easy to get swept up in the chaos, just like a rodeo rider gets tossed around by a bull. The key, however, is to stay calm and balanced, no matter what's happening around you. In financial markets, there are always ups and downs, but you don't want to make decisions based on fear or greed. Those emotions can cloud your judgment and lead to poor choices. Stick to the strategy you've worked hard to build and stay focused on the bigger picture, even when the market volatility tries to pull you in. The best investors know that panic never leads to progress. When the market takes a dive, it's tempting to sell everything out of fear of losing more, but that often results in locking in losses. Instead, take a step back. Analyze the situation and adjust your strategy as needed. For example, if you're seeing a downturn in your portfolio, consider diversifying your investments into safer assets or even increasing your savings to offset the risk. In the long run, these strategic adjustments will pay off. Having a clear strategy and sticking to it doesn't mean you ignore the market entirely. You need to stay informed and make adjustments, but those adjustments should be made based on logic, not emotion. Consider following financial experts and reading up on market trends to understand where your money might be headed. If you've planned ahead, you're less likely to get caught up in the short-term swings. Remember, patience is key. Don't let the noise distract you from your long-term goals. In times of financial uncertainty, people often forget the power of sticking to their strategy. By staying balanced, you're not just weathering the storm, you're also positioning yourself for greater success when the market stabilizes. Don't let fear or excitement dictate your moves. And as we move into the next section, you'll see why holding on for the long ride is the real secret to financial success. Building wealth is like holding on for dear life in a rodeo. It's not about getting the fastest win, but about sticking with it for the long haul. Just like staying on a bull for 8 seconds is tough, staying invested for the long term requires patience, persistence, and consistency. Quick wins are rare in investing. It's the steady, long-term investments that pay off over time. Think about compound growth. It's like a snowball rolling down a hill, gaining momentum. The longer you stay in the game, the bigger your returns will get. When you start investing, it's easy to get caught up in the rush of wanting to see results quickly. You might think, how can I make money now? But the truth is, it takes time to build real wealth. You might be tempted to check your portfolio every day, but that'll only drive you crazy. Instead, focus on making consistent contributions to your investments and let your money work for you. Over years, those small, steady contributions can grow into a fortune. A great example of the power of long-term investment is Warren Buffett. His investment strategy revolves around holding stocks for the long run. He isn't chasing quick profits or trying to time the market. Instead, he's focused on buying great companies and holding them for decades. If you adopt the same mindset, you'll find that wealth doesn't come from trying to get rich quick. It comes from growing your assets slowly and steadily. The key to success in investing is not to be swayed by short-term fluctuations. The market is like a wild ride, and it can be scary at times. But if you can hold on through the bumps, you'll come out on top. As we head into the next step, you'll learn how to manage risks effectively, so your journey to financial freedom isn't derailed by unnecessary losses. Investing without the right tools is like riding a bull without a helmet. Sure, you might have the courage, but you're setting yourself up for unnecessary pain if things go wrong. Smart investors use risk management strategies to protect themselves from financial harm. One of the first things you should do is diversify your investments. Instead of putting all your eggs in one basket, spread your money across different assets. This way, if one investment goes south, others can help cushion the blow. Another critical tool in reducing risk is setting stop-loss limits. It's like putting a cap on how much you're willing to lose on any given trade. For example, if you're buying stocks, you can set a stop-loss order to automatically sell if the stock price drops below a certain threshold. This protects you from huge losses and helps you sleep better at night. You're not at the mercy of a sudden market crash when you've got these safeguards in place. One of the biggest risks that investors face is emotional decision-making. When fear and greed take over, people often make poor choices. That's why it's crucial to have a clear strategy in place. For instance, if you're thinking about investing in real estate, set specific goals, buy one property every year, stick to properties with high rental yields, and don't over-leverage yourself. Having a plan keeps you on track, even when the market gets wild. Lastly, always have a safety net in place. Even the best investors face setbacks, and having an emergency fund or backup plan can make all the difference. Whether it's a cash reserve or a portfolio of more conservative investments, know that you can weather any storm. As we move into the next step, you'll learn how to bounce back from mistakes and keep moving forward stronger than before. Learn from every fall and get back up. Even the best rodeo riders get thrown off, but it's not about the fall, it's about how you get back on. The same goes for investing. Every investor, no matter how experienced, faces setbacks. Whether it's a stock market crash or a bad real estate investment, losses are part of the game. The key is to learn from those failures. Analyze what went wrong and adjust your approach. If you lost money on a stock, ask yourself, did I do enough research? Did I let emotions cloud my judgment? These questions help you grow. It's also important to remember that failure doesn't define you. Take Bill Gates, for example. His first business, Rodeo, was a total flop. Yet, he didn't give up. He learned from the experience and went on to build Microsoft. Similarly, if you face a financial setback, don't let it define your future. Each loss is a lesson that shapes your success. Just like a rodeo rider practices again and again, use your losses as opportunities to improve your strategy. One thing that separates successful investors from the rest is resilience. For instance, when the real estate market crashed in 2008, many investors panicked and sold everything they had. But those who stayed the course and bought properties at rock-bottom prices became incredibly wealthy as the market recovered. If you stay committed to your long-term goals and use each fall as a learning experience, you'll be in a much stronger position when things turn around. The most important thing is not to let fear hold you back. Sure, the losses sting, but if you focus on the lessons, you'll develop a mindset that pushes you forward. As we move into the next step, you'll learn how to let go of bad investments without regret and make room for more profitable opportunities. Knowing when to let go is crucial for your financial success. It can be tough to admit that an investment isn't working out, especially when you've put time, effort, and money into it. But just like a rodeo rider who needs to let go of the bull before it's too late, investors need to recognize when it's time to cut their losses. Holding onto a losing investment out of pride can lead to even bigger losses. It's better to walk away early than to hold on for too long and risk more. One of the best ways to know when to let go is to set clear parameters for your investments. For example, you could decide that you'll sell a stock if it drops 20% or more. Having these boundaries in place helps take the emotion out of the decision. It's not about feeling guilty or defeated, it's about being smart. If the investment isn't delivering, it's time to move on and look for something better. This can be tough, but think of it as protecting your financial health. Take Warren Buffett's approach. He often says that his favorite holding period is forever, but only for investments that truly add value. When a stock or property stops performing, it's time to reassess. For instance, if you've been investing in a company and its fundamentals start to shift, it might be time to let go. Look for signs that the investment is no longer aligned with your goals. Is the company losing market share? Are there new risks that weren't there before? If the answer is yes, it might be time to let go. Letting go of a bad investment isn't a failure, it's a strategic move. In fact, it's often a necessary step to make room for better opportunities. Just like in the rodeo, holding on too long can cause more harm than good. As we move into the next section, you'll see how surrounding yourself with the right mentors can help you make better decisions when it's time to let go and when to keep pushing forward. Rodeo champions didn't get to where they are alone, they learned from the best, seeking guidance from experienced riders. The same goes for successful investors. If you want to excel in the world of money and investments, surrounding yourself with the right coaches is essential. These coaches could be mentors, financial advisors, or even books that offer real-world insights. The key is to learn from those who have already navigated the bull market and succeeded. One of the smartest things you can do is find someone who has been where you are and is where you want to be. If you're just starting out in investing, you'll want someone who understands the ins and outs of the stock market, real estate, or whatever investment strategy you're exploring. Mentors can help you avoid costly mistakes and steer you in the right direction. For example, consider reading books by successful investors like Warren Buffett or Tony Robbins, who offer guidance on how to make smart financial decisions. Sometimes, the best coaches are those who have experienced failure and come back stronger. They've been through the ups and downs, and they can teach you how to handle the tough moments. They can also help you focus on mindset, which is just as important as knowing the mechanics of investing. Think about it, without the right mindset, it's easy to get caught up in fear and uncertainty, especially when markets get volatile. A solid coach will help you stay focused and positive even when things don't go as planned. Having the right guidance makes all the difference in your financial journey. The road to success isn't always straightforward, but with the right mentors by your side, you'll have a clearer path. Next, we'll look at how your mindset can make or break your financial success. It's not just about the numbers, it's about how you think about money, how you make decisions, and how you stay focused on your goals. Now that you've got a deeper understanding of how to navigate the bull market, it's time to put all of this into action. You've learned how to stay calm when things get chaotic, how to ride out the tough times, and how to make smarter financial moves with a steady mindset. But here's the thing, this is just the beginning. If you want to build lasting wealth, you need more than just strategies. You need a holistic approach that nurtures your mindset, your habits, and your wealth. Remember how overwhelming it felt when you didn't know where to start? That's behind you now. You've got the tools to begin building your financial future with confidence. But if you're serious about making a real transformation, taking that next step and not only managing money but mastering it, I've got something for you. Hit that subscribe button and turn on notifications so you can keep learning how to unlock your full financial potential. And if you're ready to dive deeper, check out my exclusive material, Holistic Health, Nourish Your Mind, Balance Your Finances, Transform Your Life. In this course, you'll learn exactly how to create passive income streams, eliminate debt, and maintain mental clarity under financial pressure, all while ensuring that your mindset is set for long-term success. Click the link in the pinned comment now and start transforming your finances today. It's your time. Check out the material in the pinned comment to start your journey.